January 28th, 2025. We ended up getting essentially a bull channel day that rallied for most of the day, but really, for a lot of the day, it didn't look like it was going to be a bull channel. And it ended up just happening. And then you look at the end of the day and it was a pretty large rally. It's lagging on me for a second. All right. Bar one, a bear bar with a large tail. It's possibly three or four legs up. 1, 2, 3, 4, or 1, 2, 3. However you want to draw it, we're a little bit higher up in the range, in yesterday's range, than you probably want to be buying. So you could sell below 1. I don't really like to take trades below bar 6 or before bar 7 for the most part, but it is logical to sell below 1. 2 consecutive bear bars, a large tail on the bottom. It's okay to be short, but again, you're selling against a reasonably tight bull channel, so it's really not as good as it could be. 3 straight bear closes. So do you sell the close of 3? I don't know. I think that it's, any given reversal on the open, any sort of strong move has a 50-50 chance of reversing. So selling the close of 3 might not be as great as you want it to be. 4, a bear bar, but with large tails on both sides. I would not sell the close of 4. I think you're selling really low in what's probably a developing trading range. Again, trading before bar 7 really isn't all that great. The 4-bar micro channel system that I talk about a lot is theoretically a sell to close on bar 4, but it's early in the day, and those will often end up becoming. Sorry, I had to pause the video for a minute and take a phone call. I believe I was on bar 5. But anyways, I know that selling this close, bar 4, is not a good trade simply because I've done it a lot of times. When I was backtesting my 4-bar channel system and working on it, I found that trading before bar 7, and especially trade like this where you have a large tail on bar 4, it helps you think about the fact that it's really not a very good sell. And I know that had I sold the close of 4, I'm probably going to have to exit the trade above 5. And if I don't exit the trade above 5, I have much greater risk of getting stopped out. So I did buy above 5 today, and I ended up getting out at break even. I wanted 6 to close on its high, and it didn't, so I ended up exiting at break even. It's totally fine to hold. I just didn't end up doing it in that particular situation. My other trades on the day where I bought the close of 12 and I exited basically around the close of 45. So I knew that this was going to get a second leg up. I just didn't know how it was going to look. So I bought the close. I basically waited through all of this, and I wanted a good reversal up. And I was doing other things at the moment, so I probably could have added above 30, but I didn't end up doing it. But I think it was incredible by the close of 12, and I exited up here, and I sold the close of 46 because this is a late leg. 1 pullback, 2 pullback, 3. So I sold the close of 46, which in hindsight, I don't think I need to be trading on limit orders. In this type of environment, it's a good trade. I know selling the close of 46 is a good trade, but I just don't think I need to do that. In general, it's probably better for me to just wait and take a stop order. So I sold the close of 46 and I exited with a pretty good profit at the low of 50, or it was around the 51 low. The goal was to get out at the bar 41 low, and when 51 was somewhere down here, it started to stall. So I just exited. I sold below 55, taking a chance that this might be a trading range day and we get a collapse down to the bar 29 high. And I think my disappointment was bar 57, and I probably should have just exited on the close of 57, but not really a big deal. Exited above 58, and I bought the close of 60, and I exited at the new high. And then I sold the new high during 63, taking a chance that it wasn't going to rally that much further. My reason being that a lot of times when you get these 4-bar micro channels and you're trying to get a measured move of some point or something like that, a lot of times you just don't get it and the market starts to sell back off. And so I ended up exiting that trade with a very small loss. So I did good today. It wasn't like a crazy good day, but I ended up doing decently today. Anyways, 6 follow through. So 5 and 6, good follow through for the bulls. We're probably going at least a little bit higher. 7, a large bull bar. We have three straight bull bars. 7 is climactic though. So that is the only issue with 7. And it's a big, small, big pattern, 5, and then a pullback on 6, and then a big bar 7. So we might pull back first, but we're probably ultimately going higher. Okay to buy the close of 7 and look for a second leg up. Disappointment on bar 8. Do you exit below 8? You probably can if you're long, but instead a lot of traders bought the close of 8 trying to make sure 8 doesn't trigger. And we get 9, a bull bar closing near its high. You can buy above 9 if you would like as well, expecting that we go higher. 10 consecutive bull bars, good for the bulls. I think we're probably going to get at least another leg up, probably 2 to 3 legs up, and we are in a bull micro channel. 11, another bull bar. You can buy the close of 11, but you're just buying late. So You just have to recognize what you're doing. If you're going to be buying up here, you have to be willing to hold through something rather disappointing. 12, another buy the close bar, 4 straight bull bars. We're probably going at least a little bit higher. 13, a bear bar closing somewhat near its low. It's, essentially, you could argue it's a nested low too if you wanted to. You could argue it's a nested second leg up. But I still think, 12 is not going to be the high of the day. Let's put it that way. When you're looking at 13, 12 isn't the high of the day. So you're not selling 12. And it's a micro channel since 4. So 4 through 12, 8, 9 bars, probably buyers below. 14, a bull bar. Good for the bulls. We're probably going at least a little bit higher, but not all that ideal. 15, an inside bar. Again, at this point, what are you looking for? I can sit here and go bar by bar, but really what are you looking for? Bulls are looking for a 2 or 3-legged correction, maybe back to the breakout point, the bar 10 high, and then a reversal back up. Bears are looking for a pullback and then a lower high major trend reversal, something along those lines. So 16, an outside up bar, good for the bulls. We have leg 1, pullback, leg 2, pullback, and then we had nested 4 legs up. So this is leg 1, leg 2, and then leg 3, 14 through 21. And within 14 through 21, we have a nested 4 legs up bar. Let me just remove this one. So we have a nested 4 legs up. I already grabbed that third leg. So the third leg is from 14 to 21. And then we have leg 1, pullback 15. Leg 2 on 16, pullback 17. Leg 3 on 18, pullback 19. Leg 4 on 20. So we have a nested 4 legs up within a third leg. What does this mean? It means it's a late leg in a lot of scenarios to be buying. And if you're buying above 16, you're buying a late leg. You want 17 to be a giant bull bar. It's not. You get a good bull bar on 18. Maybe you buy the close at 18. Doji bar, disappointment, traders exit. You buy on 19, doji bar, disappointment, traders exit. On 20, we get a good bull bar. Traders, do you buy the close at 20? No. I mean, you're buying, every time the bulls have had a chance to buy 16, 18, 20, you end up getting something disappointing. So it's really not that great to be buying up here. We have an outside down bar on 21, a large tail on either side. The bottom of the channel is the bar 14 low. 22 consecutive bear bars. The bulls should exit below 22, and you can sell below 22, expecting another leg down. Follow through on 23. So 3 straight bars, 21, 22, 23. I'm expecting that we go at least a little bit lower. This should get a second leg down, but it's ultimately probably a minor reversal because they're just the reality is the rally from 5 to 20 is stronger than 21 to 23. It's just how it is. 24, another bear bar, but a large tail on the bottom. Am I selling this close? No, I'm not really willing to sell this close. You're selling, one of the first closes above moving average in a while, and it's disappointing in the 4-bar micro system. The 4-bar micro channel system is does really poorly in trading ranges like yesterday, and it does really poorly when you're trading counter trend like bar 24. 25, an inside bar, a high 1 buy for the bulls, but not really that great. We have outside up 26. You could buy above 26, but you probably still have to have a stop below bar 8. 27, we traded below. 26, buyers below, and the reversal up. And then 28, a bull bar. Now we have a higher low. 27, 28, 29 trades below 28, and we again have a higher low, and then a bull bar 30. So once you get 30, I think you can move your stop below 27. 31 consecutive bull bars. If I had sold the close of 24, I know that 30 is going to stop me out, and so. I know that when I see 30, the odds are high that I'm going to get stopped out. And if you buy the close of 30, the odds are high that you're going to get to the bar 21 high. So something I would encourage you to do is when you're in a trade and you get a bar that makes you think your stop's going to get run, write it down and write down how many times your stop gets run off that bar. Because what you might start to find is those trades that make you think, oh gosh, now my stop's going to get run. We got bar 30 and I sold the close of 24. Now I think we're going above 21 because of bar 30. You might start to find that it's a pretty reasonable area to reverse your position and you have a good chance of making money. 31 consecutive bull bars, 32, 3 straight bull bars, 30 through 32, and then another bull bar on 33. 4 straight bull bars, we're going to get a second leg sideways top. 34, another bull bar, but a tail on the top. It's 1 and then a smaller bar, a pause, 2 and then a pause, maybe 3 and then a pause, 35, so not really all that ideal. To be buying up here, that we're probably going to start to go sideways pretty soon. In any rally, this could be a final flag, right? 33 through 40 could be a final flag. So any breakout above a final flag usually retraces back into the final flag like we did. So this I see as a final flag. 41, a bull bar closing near its high. 42 consecutive bull bars. You could have bought above 41 for a breakout above the final flag, but you have to be cautious buying up here. 42 consecutive bull bars, but a large tail on the top. 43, a big bull bar, but probably disappointment soon. 44. And what did I say about 30 through 35? What did I say that was, right? 3 legs up. 41, a bull bar, a pause. 42. 43, a bull bar, a pause. 44. 45, a bull bar. So buying 45, you're buying a third leg up. And that's why, 45, 46 could sell the close bars. But it's difficult. You shouldn't be trying to fade bull trends. It's just, I did it today and it worked, but that's probably not a good thing overall because it makes me more adamant about taking trades like that and gives me confidence in myself in those particular situations, which really isn't warranted. So I probably, should stay away from that for a while. And then we get a wedge pullback. And as I mentioned, I did take the sell 55, because there's 3 bars, 53, 54, 55. And I've been doing a lot of research on my 3-bar micro channel. I'm gonna release that at some point, in my members chat along with the 4-bar. But the 3-bar one, I'm making much more detail and make a 40-minute video on how to trade it. But that's sometime in the future, and after I've gathered all the data I want to gather on it. But the point is, if I'm selling below 55, I know that I'm selling a third leg down on a possible bull trend day. It's possible it converts into a trading range day and races back down to the bar 29 high. Because if it is a trading range day, the traders who sold that high should be able to scale in and make money. But I'm not personally going to take that. I don't think that it's really that great to stay short after 57. You can, and there's nothing wrong with selling and getting out above 58, but I probably can do better there in the future. I think that when I bought the close of 60, my calibrated expectation was that 61 was a big bull bar. Because if I'm buying the close of 60, I have tails 58, 59, 60. It's possibly a wedge on a lower time frame. So buying here, I'm buying a leg 4, really, because we have bar 1, bar 21, and bar 46. That's 3 legs up. And then we're starting a 4th leg up. So if I'm buying here, I know I'm buying a late leg. So it's really not as good as it could be. So I can take the buy the close 60, but I want a good bull bar 61. So it makes me think about my calibrated expectation for 55. If I'm taking the sell, I probably, 56 is fine. I don't have a problem with 56, but I probably want 57 to be a really good bear bar, because I would not have tolerated a doji on 61. I would have gotten out. 62, 63, 64, 65. It's obviously a little bit overextended. It's, 8 bars to the upside. So we're probably going to get one more leg sideways to up, and then we're probably going to start to go sideways. For reasonable stop orders on the day, probably 1, definitely 5, 6, 7, 9, 10, 11, 12, all by the close. I wouldn't be, maybe you could buy above 18 or 16, but you have to know what you want to see, and either one of them get the follow through you want to see. 22 is probably okay for a scalp, but it's counter trend. So it's probably better to focus your energy on looking for a second leg up to buy, like 28 or 30, 31, 32, something along those lines. You can buy 41, but you have to understand you're trying to buy a breakout above a bull flag or above a tight trading range, which is a final flag is what I meant to say. So buying up here is really kind of tricky. And then as far as selling on the way down, nothing's ideal, as I just mentioned, but you can do it. And then bears exit above 58. And then we're back to clearly always in long, 59, 60, 61, and then rally into the end of the day. There will be no video tomorrow as a reminder, because tomorrow is an FOMC day. So I don't trade FOMC days. Why? I don't know. I just, the market is volatile during those times, and it's irregular price action. So I would just rather let it do what it does. And, it's like once a month I get a day to go just study rather than doing anything else, or go, work out during the day or something like that. So I just use that day for that instead of trading. If you trade it, good on you, but I just personally prefer not to. Anyways, you can see we got a tight channel, a 50% pullback, and then we're going to probably try to rally back to this high. I don't know if we do it tomorrow. It's a tight trading range. So if we do get a surprise on the FOMC, it might be, somewhat sideways. And then the weekly chart, I guess the weekly chart and the monthly chart, I could talk about them, but they're kind of irrelevant because tomorrow is going to be a really large move either way. A lot of the times anyways, it's a really large move. So this bar probably won't look this way tomorrow. But we're in our last couple trading days of the month. So it's coming towards the end of the month, and we have FOMC tomorrow. So that's going to be it for me through this video, and thank you.